All right. So all of these are capital assets that you could possibly have in your business. And every one of them would have a capital asset account on your balance sheet. Now, one of these assets is not depreciating. Do you remember which it is? Hopefully, you said land. Now, the crux of this video is that when you buy a building, it's on top of land. And we need to separate those values because we need a value for the land, the amount that will not be depreciated, whereas your building account will have a defined useful life and need depreciation. So here's an example of how we go about that process. Assume we buy this barber shop for $1.2 million. Now, of course, the building is on top of the land. We're getting them both together, but we need to separate the values. So what we do is we need an appraised value for this. And it's pretty easy because the Property Tax Assessment Office does this for us every year. So it will tell us the appraised value of the land and the appraised value of the building. The first step in solving these problems is to total up the appraised value. So in total, that purchase is appraised at $1 million. We paid 1.2, which is kind of normal because properties do appreciate. It will never be the same amount. So we're going to focus on these appraised values and figure out, okay, if the land is appraised at $800,000 out of a total of $1 million, that's 80% of the value. So we're going to take the appraised value and divide it by the total appraised value for a percentage. And the same with the building. 200,000 divided by $1 million is 20%. Now that we have these percentage allocations from the appraisal, we can apply it to the price we paid. So, if we're looking for a value for our building, we're going to take what we paid, the 1.2, and times it by 20%. 240,000 will go to our building account. The 1.2 million times it by 80%, that's 960,000. That's the amount that will be allocated to the land. If you add these two amounts together, you will get that total amount we paid. So, when it comes to doing the journal entry, recording this transaction, when we buy that land, 240,000 will be debited to our building account, or 80% of the purchase price. 20% will go to our land account in this case. And of course, we'll pay for the property. All right, move on to the questions posted on eLearn. Thanks and have a great day.